from where you sit.
A very warm welcome to the Trading Bell. Now this week we are going to be talking to Absa Head of Markets in the region, George Asante. Just recently, this month in fact, Absa released their financial markets index that covers 20 countries on the continent. We'll be talking more to George Asante about this, but first, here is his profile. George Asante manages the markets business across Africa, excluding South Africa. He joined the corporate and investment banking team in South Africa from Ghana, where he was the director, country treasurer and head of markets for Barclays Ghana. Prior to that, he worked in the emerging markets structured products group at Barclays Investment Bank, Barclays Capital, based in London, with focus on Africa rates, FX and credit structuring. George is a chartered accountant and holds a Bachelor of Science accounting degree and an MBA, both from the University of Ghana Business School. It's time to get right into the conversation with George Asante about the Absa Financial Markets Index report this year and what is indicated for various countries on the continent, including Kenya. All right, let's start off with the fact that this financial index report spans so many countries in the continent. What's the aim behind it? What's the purpose of this index?
Thank you once again. So the purpose of this index report, as you put it, is really to measure the investor friendliness of the different African markets. So basically talking about how deep are these markets from an investor perspective, what is the range of products available, how easy is it, can an investor execute a transaction on the financial market, and it captures all the different silos of the financial market. So from money market to fixed income market to equities market to the bond market, it takes all of them together and consolidate them to try and get a value on where the relative markets are. And one of the big achievements of this report has really been identifying where each of the countries are doing very well and where they are not doing well, and countries being able to learn from each other, looking at it from a pure African perspective. So really that is what this index is trying to achieve. Okay,
and when we talk about financial attractiveness, what does that entail?
So the index tries to measure the strength or maturity of the financial market in terms of its accessibility and how easy is it for an investor to execute a transaction on the financial market. So it goes way beyond just the attractiveness in terms of returns. It's saying that returns is good, but how easy can you actually exit a position that you have in an asset class in the various markets? And that is important because for an investor, those are some of the things they really think about. It's not just about return. Yes. It's about the ease of actually clicking and trading a transaction. And if I trade a transaction, would it be executed and would it be settled? For example, would I get the value that I'm supposed to get? Would I be able to value the investment that I have at any time? Do I have different options to manage and diversify my risk? Those are the things that investors really think about. And then it goes beyond that, talks about how are each of the markets really positioning themselves to facilitate trade on the continent, for example. So it really talks big issues and big things that need to be done in the continent to be able for Africa to mobilize the necessary funding that it needs, both from foreign investors and also from local investors, because there is a huge pool sitting in Africa to invest, but normally it's the avenue to invest which is a problem. So how do we help conversations around that and fast track the ability for the markets to really build new products and give investors an opportunity to invest?
So it's very interesting. I see that, you're trying to contribute to the continental development in general and of course interdependency between the African countries, not just foreign investment, which of course is a factor as well. But when we look at the index, we've got 20 countries. You've added Angola, Cameroon, Senegal as well this year. And in the top three, Kenya has come out as third. that's below South Africa and Botswana. Before we get into more the Kenyan side of things, I just want to outline some of the pillars that, of course, the index focuses on. Now, one of them is actually being market depth. Now, can you just tell us more about what that is? What is market depth, and what does it entail?
So Absa is a financial market, a financial services company that runs across the continent, and one of our passions is really to help in development of the continent. That's why we're facilitating some of these discussions. And in terms of the ranking, yes, Kenya is number 3, and talking specifically about market depth. Market depth talks about the depth and breadth of products within the market. That give opportunities for investors, for corporates, for you and I to be able to invest in the market. And it talks about if I want to execute, let's say, an equity transaction, how easy is it for me to execute? Or when I want to execute, a broker will have to necessarily go and find a buyer before I can sell. I mean, if you do that, then you probably would delay me, right? So it measures that as well within the market, and then try to tell you where are you as a market and what are the things you need to be doing to really get to a point where when I want to execute, I don't necessarily need to find the other side of the market. It talks about things like primary dealership and how you can use primary dealership to create a funding curve for the market, so that if somebody needs to borrow 6 months, it's very easy. They know exactly where they can borrow, and they'll be able to come into the market and execute that. If someone wants to list on the exchange, it's very easy to do that, and almost within a short period, they will be able to do that. So market depth really captures that, and it's one of the areas where Kenya, having excelled in other parts, Kenya needs to do a bit of work to make sure that the depth of the market really equalizes the other achievement that they've made on other pillars.
That's interesting because, of course, you did note that Kenya places top for access to foreign exchange but has limited product diversity. So would product diversity then be one of the areas Kenya needs to focus on in order to improve its market depth?
Yes, absolutely. So in product diversity, what you're basically talking about is Kenya is a liquid market from a spot perspective. If you and I want to buy FX, whether it's 10,000, 10 million or 100 million, you can do that in the Kenyan market, which is quite impressive. Across the market in Kenya, you can actually execute, or you execute $30 billion worth of foreign exchange activity on a yearly basis, which is quite good. What Kenya needs to do is, how do we leverage on this to build a derivatives market? And what actually is required aside the spot market? There is the need to build a funding market, which will enable you to now build derivatives. So what are the building blocks of those funding markets? I've already mentioned something like a primary dealership framework, getting a repurchase agreement framework on the interbank market is key. Building a liquid FX swap market, for example, is also good to really facilitate Kenya now using its big advantage or its big strength in foreign exchange activity to build other derivative products. And the question is, why do we need derivative products in the first place? You have a lot of corporates in Kenya who have exposure in other currencies, and sometimes they want to hedge those exposures. You need to give them the opportunity to be able to do that. When they have the ability to do that, they bring more investment because they see that the investments are protected, or whenever they have concerns, they will be able to take a hedge instrument to protect themselves. And that is why we're having some of these discussions, that we have a strength. Let's build on the strengths to actually have more products that give investors and corporates an opportunity to diversify and hedge their risk.
So that's interesting that you're talking about the derivatives because, of course, you know, they've had the pilot phase going on with the NSE and they're trying to figure out how best to execute it and to roll it out to the rest of the market. It's very beneficial in terms of corporates hedging and it comes in play there. But I think also in terms of the education, when it comes to the common local investor within Kenya, knowing about derivatives and being able to reach that person will obviously take time. But when we compare South Africa and the SafeX, and the NSE here in terms of the derivatives. What are some of the key lessons that Kenya then can take on from the very established derivatives in South Africa, which I believe were sometime in the 80s when they came into play?
Yes. So the first thing is the market infrastructure. And I know that the NSE, for example, is building an equivalent system to the CFEX. So that's very good. The next thing that we need to also debate and think about is how do we get more brokers and dealers like banks with strong balance sheet to be involved in the market making activity of derivatives. That is an important building block, and we urge as many banks as possible to get involved, because the more the banks, the more the liquidity. Then the third thing which you touched on really is about education, and education at various levels, right? So education at the market maker level, education at the corporate level, that's what can you use these derivatives for? Why are they there in the first place? And then another important one is really education at the trustee level, because the trustees are so critical in the development of financial markets that they steer where investment should go, for example. So it's important that we take them along this development journey, particularly in the derivative market. And then we need to take, on the other side, on the corporate side, we need to take the boards of directors of corporate entities along the journey. We can't just go and leave them behind, because they are the users of these instruments.
Now, of course, when you talk about derivatives, futures, swaps, options, somebody may be confused, they may not even understand. So as you say, the education part is important, but not just for the individual investor, but at a trustee level, those who are steering the conversation when it comes to investments in derivatives in the financial markets. Now, the Kenyan market has seen considerable growth in product offering, launching real estate investment trusts and exchange-traded funds as well. Now, the exchange is currently undertaking that pilot phase, as we've seen with derivatives. But now that we've talked about the education and the levels it needs to go to, what are some of the things that you expect to come of this in the future from the derivatives? Is there any indication of how far Kenya can benefit from it in terms of any percentage of growth numbers that you can highlight?
So we may not be able to talk exact percentages, but particularly for the Kenyan market, but if you talk about Africa as a portfolio, within 2016, there was just so much development and financial risk within the African portfolio that a lot of the pension funds and asset managers, as well as corporates, actually lost value because they couldn't protect their financial risk. So people could see in some markets exchange rate depreciating, but they couldn't hedge their risk. So you can see that clearly. Financial market products like derivative and hedging solutions are critical in protecting investor values, shareholder values, and therefore they need to be encouraged. Two things that have come up. One is really about the culture across the continent of not venturing into new things. So, and a bit of that is education, a bit of that is also a change in mindset that these are good instruments that you can use to protect value. Then there is the other side, which has to do with benchmarks that are set for asset managers, for example. If you set a benchmark for an asset manager and it's a risk-free benchmark, guess what? You only buy risk-free instrument, right? But if you set a benchmark that is like 400 basis points above a risk-free benchmark, then they are forced to go to the real sector.
Yes.
They go to the corporate sector. They build products to the corporate sector and invest in the corporate sector. And that is exactly what governments want to do. They want funds to be channeled into the corporate sector. What will be the role of trustees, for example, in setting benchmark for asset managers so that they will be more or less compelled to invest in the real sector? And those are some of the things that I think from the NSE point of view and other regulators, we need to be thinking about. How do we help the system to actually channel or be motivated to channel resources to the right sectors that we want investment to go into?
So greater challenges, setting themselves up for greater challenges will lead to, of course, growth and less skepticism.
Absolutely.
And more risks.
Absolutely.
But I guess without risk, there is no reward.
And Africa cannot grow without risk, right?
True, true. Now, you talked about some of the skepticism, of course, within the market, but also when it comes to foreign investors, there's always that skepticism, which of course, the report does help to reduce that and to make the picture clearer when you're coming into the African market. as a foreign investor. But specifically talking about Kenya, now, you know, with the tax and regulatory regime and transparency now, Kenya had experienced quite a bit of major shifting during the whole few months owing to the Finance Act 2018. First we had the bill, the approval, and then, you know, it was a bit of a push and pull before the Finance Act 2018 came into effect. And during that time, there was volatility when it came to foreign investors trusting the market. So, you know, how can we prevent such external shocks from actually creating this skepticism when it comes to foreign investors?
So when it comes to foreign investors, there are two things that normally run. There is one, which is what is happening in their own home markets, which you need to pay attention to. And then there is the second one that has to do with how do you buffer your own system? How do you stop out or build capacity within the domestic market such that when a foreign investor wants to leave, there is someone who will step in? And that talks to building a very strong market-making framework and building a strong local investor capacity. Because when someone is leaving, guess what? Another person locally can buy. Okay, so you need to do those kind of things. And then the other one about foreign investors really has to do with how easy you make it for them to exit the market. So not just closing out a trade on the NSE or selling a bond, but how quickly can they sell it and get their dollars out? And I think the great story about Kenya is that Kenya has a very deep market. From an FX perspective, you turn over $30 billion of FX every year. And that trumps other countries like Nigeria that turns over about 10 billion, or Ghana that turns over 20 billion. So it's really impressive. It's not an issue for investors to exit the Kenyan market. I think one of the things that we need to all be discussing with everybody else is really how do we monitor the ratio of portfolio investment to let's say the total reserves within the country, which currently is very strong and is one of the strongest on the continent. How do we monitor that and manage it so that when portfolio investors are exiting, it doesn't become a burden, too much of a burden for the country. True. And that is a debate that needs to continue going on. And we should also know that we should understand the cost of anything we do around that, and then the benefits that we may get around that as well. But I think overall for Kenya, from a foreign investor trust perspective, and as the report actually says, there is no concern about taking money out or being able to execute a transaction here.
Yes, so for them to take the money out and being able to transact within the market is good. But when it comes to them pulling out and then leaving behind that gap, that's what needs to be worked on. Yeah. Do you think that inter-African exchange needs to be increased?
So I think there is that passion about every African country really having an exchange. I guess the question is, in the digital age, do you need to build a whole infrastructure to reflect that you have an exchange? Why can't we have a virtual exchange? Okay, for example, across the continent, why do we need to build buildings and all those stuff? So that is something that Africa needs to think about. Because of the pride of African countries, each African country, it's very difficult to say countries shouldn't have an exchange. I think the next thing really is about recognizing the fact that each African market is small in the context of bigger things, right? And therefore, countries need to pull together to create a bigger pool. And one of the things I say is that there are pools of liquidity scattered across the continent, whether it's in Mauritius or Nigeria or South Africa. It will be great for Kenyan corporates to be able to access all these markets, raise funding there, and swap back into Kenya and make money, and vice versa as well. I think if African markets look at integrating their infrastructure, their legal frameworks, we will be able to do more and we become a bigger player on the world stage. And that is really something that I would encourage.
So coming together is something that we need to aspire towards, especially when it comes to the digital way that we can connect. It doesn't have to be a brick and mortar.
No.
Yeah.
No.
It doesn't. No. Well, African markets are, of course, critical to mobilizing local resources and international capital flow. So there's, however, a bit of misalignment in line with what you just said between policymakers and what investors prefer done in the market. So what are your thoughts on that policy making amongst African financial markets?
So the development of the markets is really a two-way thing. It's a push and pull, right? It's something that needs to exist between policymakers with investors, because really the financial markets, from a policy making perspective, must work for the government, but at the end of the day, it must work for the investor.
Yes.
And therefore, there must be constant dialogue and a platform for that discussion to happen. And that is why the Absa Africa Financial Markets tool is so important, because it brings everybody together to discuss some of those issues. In some instances across the continent, we've seen the rollout of certain rules and regulations that didn't necessarily enhance financial market deepening. If anything at all, it actually reversed financial market deepening. So one good example is what we've seen in places like Angola, Egypt, Morocco, and Nigeria at some point, where the FX regime within those markets were quite restrictive, and there wasn't liquidity on the market. And I think from a policymaker perspective plus a user perspective, there was a gap on what really would drive investment. And I think when the regulators realized that this wasn't helping, they reversed it. Immediately we see an influx of investment into all these markets. So there has been a gap, but I think the way we bridge the gap is constant dialogue by using tools as the Absa Africa Financial Market to enhance the dialogue.
So clearly the index plays a great role in also creating that space and ensuring that different stakeholders within the market are able to meet and to have that cognizance when it comes to the financial markets.
Absolutely.
Now, Kenya, of course, had this improvement in its score, I believe, from 65 to 67, was it?
From mid-50s to 65.
From mid-50s to 65, right. So what would you attribute to this increase in performance specifically?
So there are a couple of things that have happened on the Kenyan front. One of them is products are still being rolled out, which is impressive. The other one is the intention of the regulators to actually roll out new products, with like the derivative market, for example, you talked about. Then a big one has really been the liquidity in the foreign exchange market. Then the last one that I would want to highlight as an example for the continent really is the legal framework in Kenya, which is quite supportive of financial markets products. So these are the things that were tracked within the year, where it was seen as that Kenya has become a good example for the rest of the continent. And there are two things. One is for Kenya to leverage on this to build new products, right? And then deepen the market even more. And then the second thing is, how do we as Kenyans safeguard what we've been able to achieve so that we don't drop? Because guess what? Other people are quite aggressively coming up as potential investment destination. How does Kenya maintain its leadership? I think that would be very important for a place like Kenya that wants to be a hub, or that is actually a hub, and pulling together funds across the region. All
right, thank you so much, George, for joining us today on Trading Bell.
Thank you.
That is George Asante, the Absa head of markets in the region, telling us more about the Absa Financial Markets Index report for the year that came out this month, talking about different countries, 20 countries on the continent, and how their financial markets have been performing. And of course, Kenya coming in third there with a lot of factors, but also room for growth and improvement as always. Now, with that, we are moving to Markets 101. And that brings us to the end of this episode of The Trading Bell. Joining us today, of course, was George Asante from Absa, talking about the African Financial Market Index Report 2018. Keep up with The Trading Bell through our social media handles appearing on your screen. Thank you for watching. My name is Maalika Kazia.